Afternoon. How are we all doing? Afternoon. I'm going to go back to front today. Afternoon, Peter, Emac, Virginia, Gregors, Danny, JC, Monkey, Dion, Crom, Julio, John, Hamza, Amy, and Ian. Back to front. How about that? Good, eh? See, I can do things back to front. Multitasking. Fletch, you've ruined it. I've already started it, Peter. Afternoon. Right. So DAX this morning didn't really do anything. We sat sideways for an hour and a half. We got the opening range break, which I decided to exit because we just couldn't get anywhere. It missed TP by that much this morning. Came back down, double bottomed, didn't get hedged. Then it actually went up, just about hit TP, sat there for an hour and a half after taking an hour and a half to get there, pulled down a little bit, sat around for another hour and a half, and we're basically back where we were. So it's DAX is just flat as a pancake today. We have got the gap fill done on the DAX though, so we'll see where we go with the US this afternoon. We've got news this afternoon at 3 o'clock. So the consumer confidence report comes out. It's very hit and miss. Hopefully the market's not going to hang around and wait for it. Might do though. So we need to just wait and see what happens at 3. We might get some volatility, but that's very hit and miss, that one. So we'll see what happens. So yeah, that's news today. There's no other news today really. We've got Wallace speaking this afternoon as well, so that might impact the market a little bit after the open, but we'll see. So main news tomorrow, this is where it all kicks off with the CPI for the Aussie and the rate for the New Zealand dollar. So this morning's news, we had a little bit more out of OPEC this morning. I was running a test. Volume's low as well. So Canadian dollar came crashing down. I was going to take this off. We hit this monthly high just below ADR and we bounced out of it. And as it started to pull down, I was like, should I take that off? Yeah, I might bank a bit of that. Then it all collapsed. So I didn't manage to bank it, which is really annoying because it was at 0.35% in drawdown. So just completely missed my exit today. Oil basically had a big drop, flipped the CAD over, but nothing much I can do about that. I missed it. So that's all we've had really this morning news-wise. Bank of England have been talking, but nothing particularly exciting. So yeah, nothing again. Nagel, yeah, we know about the rate hikes not being over. So yeah, nothing on the news this morning either. Afternoon, Marion, Brian, Neo, how you doing? So yeah, basically, I haven't banked anything today. I had an opportunity to bank a load of CAD Swiss. I still can. I just don't want to. We basically put in a new higher low, or we put in a new higher high rather on this. So it's just I just don't like the way this price action is expanding. So we had this double bottom. So that's your low, high, higher low, higher high. This should be our higher low on our way up. But I just don't like the way this volume is expanding. What I'm worried about is this just being a pullback on the next leg down here, which is now pretty much a 50% retracement. But I'm kind of hoping we can get up to there before we do that pullback. That's what I want to watch. But I was hoping we're going to get there today, but we didn't. So we'll see what happens, see whether we get that push from there. So that's news covered. Nothing banked. ADRs today, flat as a pancake. We haven't got any. So no ADRs to look at, no weekly ranges to look at. RSIs, no hourlies to look at. All the hourlies, 4 hourlies we looked at this morning are all flat now because they've pulled back. There's just nothing to look at the minute. The market is really not doing a lot. It's kind of grinding a little bit, but nothing's getting really extended really fast at the moment. So you got 4-hour RSI extension again on the pound US. That's a nice divergence. Excuse me. I've been programming all morning. It makes me really sleepy. Too much brain power being used. So we've got a nice divergence forming there. It's a multi-day, multi-week divergence as well. So, you know, this is all looking like we need a catalyst to power up this US and bring these indices down, because these indices are all well overdue. The pullback, it's kind of an elastic band theory we got going on here, and it's really taut. I'm expecting a big move. But just looking at the potential catalysts we've got this week for moving, literally we've got unemployment claims on Thursday. Tomorrow we've got the GDP figure and PMIs on Friday. So I don't think this is going to do it, but it could start it. So if we get a positive figure there, we could start that move on the US and start that move down on the indices, which is overdue. We will see. So pound US is extended, US dollar CAD is extended obviously to the downside. That's still coming down at the moment, which is interesting because I thought the Canadian dollar was moving. Maybe not. So that's the Swiss franc powering up, not the Canadian dollar. Okay, well, that could be just a quick injection, and that could reverse itself very easily today. So that's better than I thought. Right, so we got 1 minute to the open. Range is pretty tight today on the US indices. Nothing has really gone very far. So, excuse me. We'll see where we go. Hope we get some movement this afternoon. Definitely. US dollar Swiss going down. Yep. Right. So no pre-market range on the NASDAQ, too tall, too short. S&P and Dow both long. Come on, computer, wake up. So see if we can get a decent break today. We'll have a look at the US dollar Swiss as well. Yeah, coming down at the moment. We're getting a fourth position on that if that carries on. It's just grind. This is the trouble with this CPI move. Literally, this is what I was talking about this morning. Sideways, one move. Sideways, one move. All we're getting at the moment is just this horrible grindy price action. No movement, just grinding. So we've broken out the monthly low there. It's not very good, the monthly low. That is very... That's kind of where the low of the month was. That first day of the month in August is where the market rallied from. So that is officially the low of August. We have had the double bottom bounce out of it, but we've broken it now. So we're looking at these areas down here for support, which is about somewhere between 100, 150 ADR today. So probably more likely hit that tomorrow, unless we get a big negative number on the confidence level figures, but we might do. See what happens this afternoon. A lot of volume coming in. Market really jittery today. A lot of volume moving up and down, but not broken yet. Afternoon, Mark. Is the Dow near an all-time high? The Dow. So your all-time high is that level there, which is 200 ADR today. So if we're going to remain bearish, we need this to be the end, basically, and then we start a new leg from there. So either way, I think we've got to have some pullback on this. This market is absolutely exhausted. It needs to pull back. Hedged on the Dow. So yeah, but if we can get up to there, we're going to find some limit orders sitting at that high, definitely. It's not an all-time high. It's a yearly high. That's last November. So, you know, that Santa rally, if we get it this year, could well take us up there. Probably will take us up to that all-time high level. Not sure what that level is there. That. Two in place. Those anymore. So today, obviously where we are at the moment, we are in a 3-day contract or 4-day contraction really at the moment. So we've got obviously these two dotted blue lines here of yesterday's low and Friday's low. Then we've got the low of previous day there, which is that high. So anywhere really in that zone, as you can see, we've just not gone anywhere for days now. So we're stuck, really, really tight contraction. The ADRs are really down. So the problem with this type of scenario is if you get into a hedge or you're trying to find entries, where do you get in and out? Because this is very, very close, but this is all we've done over the last 3 days. So are we going to continue in this contraction, or is this the start of that 200 ADR day we get where we start to move? Not going to know, really, are we? Until it happens. So upside, you want to be watching. That last week's high is really irrelevant now already because it's been invalidated. So the high from yesterday where we had that spike, that's your upside target on the Dow today for potential liquidity. Downside has got to be yesterday's low and previous day's low. We haven't touched either of them today. So you've got that as a downside, that as an upside on the Dow. Looking at the S&P, it's a very similar story. We are sitting on the previous day's lows, which have been rejected so far. So your upside is going to be previous day's highs. Then we've got a weekly coming up. If we collapse down, you're looking at a couple of different weekly levels. You can see how tight these lines are. Look, I mean, these are weekly highs and lows. Yeah, there's just no movement. We're totally stuck. This market has been thrown into complete confusion by these CPI figures. NASDAQ, a little bit more room on the NAS for movement. So we've got ADR today is within the high from last week. And obviously we've got these lows, which are yesterday's low. Yesterday's low. And then we've got the day before, earlier last week. Down here, we've got two levels to the downside. So there's multiple sort of supports and resistances all over the place. It's hard to trade in these little rangy markets. Could go either way. NASDAQ's put in a fairly decent range. So we're looking to take a break of that 5-minute range on the NAS. No volume, no breakouts again. It's just dead. The market's dead. Nothing you can do in these types of conditions. You just got to sit through them. Watched the Forex Hedge last night. It's a strat begging to be automated. I shall have a look at some point. Can I please ask what are your drawdown control settings for the hedging strategy? Well, I don't know. Have a look at the set file. It's in the Telegram group. I'll get it up. I'm hedged on the other. It's all hedges today. It's going to be a nightmare day again. This is not my month this month at all. Well, it is actually. I'm up. I made profit this month, but It's turning into a nightmare. Market going sideways is absolutely useless to everybody. What about gold? Are we going to 2040? I have no idea. I don't trade it. When it opens, I shall show you what the settings are. It's on a massive go slow, my VPS at the moment. I kind of need to reboot it, but I might actually do that. So on this account, I'm hedged. That account, I'm not. Same broker, same settings. They decided to go a pip lower on this account than they did on that one. So I'm long only on the S&P over here. I'm hedged here. Market's a mess at the moment. Absolute mess. Come on, wake up. There we go. Right. Come back to that in a minute. Okay, so hedged on the Dow, hedged on the S&P now. NASDAQ still inside bar on the open. So targets on these. S&P got to be yesterday's high, which is 3R. Downside target, much more difficult to pick. Downside target on this. Got to go back years, but yeah, I mean, it's got to be that low from last week. So that's a very clear support resistance for a double bottom. If we can break to the upside, be looking at yesterday's high. If that fails and we break yesterday's high, we're banging straight into the previous day's high. If that fails, we're banging straight into last week's high. So getting out there, obviously, if it continues to push up, I'll get into an aggressive exit and try and get out of it that way on the S&P. So it's fairly straightforward, the S&P. Dow, much harder, much harder. So the Dow, yesterday's high, upside, that just doesn't seem far enough, does it? Just under 2R, but in these conditions, that's all we're getting. I mean, that's 50% of ADR we did the day before yesterday, including that spike we did of just over half an ADR. That's Thanksgiving. That was less than half an ADR. We're not even getting half an ADR. So realistically, if we get up to there, you want to be out. Downside, I mean, it's the pre-market low. That's literally 1R. Can't get out at 1R. I'm just going to leave the downside down here for the minute and see where we go. Gonna have to play this one by ear today, I think. NASDAQ's not broken out yet. And we're inside bar. So it looks like we're waiting for the news. The other reason I don't want to get too close with the targets, if we get a massive news spike, we're going to be out. Very, very quick. Right, hedging strategy, DD control. I don't know if this is my connection or something, but this is really slow. DD control is 1.5R, 30%. So 30% when we get to 1.5 hour in drawdown. Which is, this should be the set file that's in the Telegram group. This is all I've done is I've put the Telegram group set file on this account. So haven't changed anything on that. 22 DD, 47 banked at the moment. ADR reversals, banked 11% this month, 2% drawdown. H4. %13 banked, 2.7% drawdown. So everything just ticking along at the moment. CAD Swiss is the pain in the backside. Swiss franc basically is the pain in the backside at the moment. Pound CAD is in 8% of drawdown. Look at that. Pound CAD. It's been short in the pound CAD. Sideways again. And, you know, the whole week we've gone sideways on this thing. Look. It's just been grinding. Not one let up. So yeah, there you go. There's nothing to look at here today with FX. So we went through basically the ADR. Well, there was obviously no ADRs this morning either because there's no ADRs this afternoon. There's virtually no RSIs to look at this morning. There's nothing really moved. Short on the NASDAQ. Market's trying to break short. So short NASDAQ. So there's nothing much to look at on FX at the moment because, as you can see, we're not going anywhere. We are moving intraday fairly nicely, but it's literally just up, down, up, down, up, down with the vast majority of stuff at the moment. We are just stuck. So we're waiting for something to kick in to drive the market somewhere, basically. We've obviously, since that CPI figure hit the US dollar, we've kind of stopped with a lot of currency pairs. Everything's grinding a little bit, as you can see with the US dollar Swiss at the moment. The yens did their pullback and look like it might be starting to power up again, but not very convincing, as you can see. So this is like 1, 2, 3, 4, 5 days. We haven't gone anywhere. So everything's just kind of stuck at the minute. We're sitting there really looking. As I said this morning in the live room, it really feels like I'm entering into Christmas trading conditions. It feels like the market's just gone, yeah, let's shut down for Christmas. It's bizarre. We've frozen. So I'm hoping we're going to get some news catalysts. Maybe the Aussie New Zealand might kick it off tomorrow morning with the interest rate. We just need something to inject a little bit of life into this market because it's flat as a pancake at the minute. So we've got CPIs coming out tomorrow for Eurozone as well. So it's a fairly big news day tomorrow. We've got 4 currencies affected, 5 if you include Bailey, but not really going to happen. So yeah, we've got 4 major currencies being affected by news tomorrow throughout the day. So if we don't get something kickstarted in the next 15 minutes with the US dollar, hopefully we'll get something kickstarted tomorrow. But month's just stuck really at the minute. Not a lot I can do. Anybody got any other pairs they want to have a look at? The Forex Hedge. It's only got 2,500 subscribers and 8 videos. Who is this bloke? He's only been going for 3 months. Are you sure? You sure about this? I'll bookmark it and have a look at it, but Not convinced. 8 videos, 3 months. Not exactly an expert, is he? I don't know, he might be. Might just suddenly decided to go on YouTube. I don't know. I'll have a look. US dollar CAD. Yeah, I mean, not really going anywhere at the moment. I got out of the long from Friday, yesterday. So we had long there, exited there. Just broken last week's low. There's a couple of levels coming up. So we've got this area here, which is within ADR today. You've got that area there, which is ADR. And this is the basically propulsion move that started that all those legs up. So you're going to find some orders sitting around this level here. But if that breaks, obviously, we're just coming down to fill these propulsion gaps, and then we'll be testing that monthly level. So we'll be forming a range there. But it's not really extended at the moment. That was the extension. That was the exit. It's difficult. I've no idea where this US dollar is going at the moment. It's very difficult when you've had a big fundamental where the market has sustained the move to see it in any other way but down. Which is why I was saying we need some news to confirm that. So if we start getting negative numbers coming on the US and we see them sell hard, we know that the US is a bear. If we get negative numbers coming in and we get spikes and just don't really go anywhere, we know the market's not sure about selling the US yet. If we get any negative numbers and they buy the US, we know definitely this is not going to stick. But at the moment, there's not really anything you can sort of look at this and go, yeah, that was the entry. If you didn't get out on that, which you would be forgiven not for getting out on that because it was only a tiny little move. I banked 0.25% on it, but it's just a scaling, basically, waiting. So if you're in there, that low is 40 pips, which is half an ADR. That high there is 72, which is roughly an ADR. So scaling in, second entry somewhere there around about ADR today. If it drops, would be ready for a bounce. Probably going to get into 5 positions by the time you get to a monthly low. And if you get to a monthly low without getting an exit, you're going to get a lovely ping back on that. That. Exactly the same as that move there, look. So that big, strong push down. Entry, entry, exit. So if that continues to push down to the monthly, you're just looking for the next pullback on it, basically. But at the moment, it's not extended, so it's not really anything at the minute. Demetrius downloaded the MRA set files folder, but drawdown control setting is turned off. That's a different set file. If you downloaded the ones from the website, that's not the H1 hedging set file. That's the M5 mean reversion hedging strategy on here. Different strategy. That's this one. But drawdown control is up to you. There's no right or wrong. It's just whatever you want to use, really. Have I found a broker for the FTSE? No, I haven't really looked. I've been busy this morning doing other things. Okay, so market's looking like we're starting a little bit of a bear move, but doesn't look particularly sure at the moment, does it? Brian, out of curiosity, can you average in with the SIH on your hedge position? to average in on your hedge position to bring your break-even average down. Yeah, you could do. I mean, that's what the SIH, that's what the aggressive exit setting is. So your conservative exit and your aggressive hedge exit. So the aggressive hedge exit is averaging into the position. That's basically what that is, the aggressive hedge exit. But it only does it once. But you could do more. The problem with the trouble with and I've tested this. So basically, when I was developing the strategy, I had, when you get hedged, obviously the TPs automatically move further away because we want to get a big move when we get hedged. So when we exited that first hedge, I had set there your aggressive exit. If that aggressive exit failed, I had it set so that there was a second aggressive exit taken at ADR if it hit ADR. The problem is, on big days where you get moves like that, which are 150% of ADR, this is obviously US dollar CAD, not a stock index, but it's the same thing. When you get 150 ADR days, you get hurt badly. So you want to get hedged again, really, is the ideal to do. But just hedging for hedging's sake doesn't work. You need to hedge at a level that makes logical sense, like a support resistance. So that's not really something you can build into an EA, because the support and resistance area is going to be discretionary. When you look at something like the Dow today, yeah, there's a pretty obvious support there. And there's an obvious support. Well, it's not really a support, but it's a level that will be respected because it's the open of the day before. Failing that, you've got maybe a level there that someone might pick as a support resistance. Someone else might pick that level there, which is also ADR. So herein lies the problem. If you're going to get an aggressive entry there and it doesn't work, re-hedge that. Where do you re-hedge next? There? Or do you wait for ADR? And if you're going to take ADR and it breaks through that and you re-hedge, where do you put your next one? I would put it there, not at 150 ADR, but shy of it, because we've got a monthly high. Yeah. So you can't. This is what I constantly say. There is no EA that is clever enough to be a human being. It doesn't exist. AI can make educated decisions, fine. But AI is just a single trader person, isn't it? Same as I am a single trader person and you're a single trader person. So difficult to... my testing that would get out, get aggressive, fail, and then get aggressive again worked virtually all the time until it didn't. And this is very much similar to martingale. Works very, very well until it doesn't. Yeah, but there's only one or two instances that it won't work, but those one or two instances will kill you. That's the problem. It wipes out all the profit. So there wasn't a way of really doing it. Re-hedging, I think, is probably your best bet. All you're doing is just locking in more loss, but it's better than locking in a horrific loss. But, you know, this is the thing. You've got to be able to identify these market conditions. We haven't gone anywhere for 2 days. We had Thanksgiving. We had a short market day. Yesterday, we didn't do anything. So what's it going to do today? Logic would dictate it's probably going to bounce somewhere around there or bounce somewhere around there. If it doesn't, how do you teach something that you're on a 30-day run that is due an elastic band snapback? You can't. The only way that anybody's going to spot that is by going out in their chart and going, holy crap, yeah, we haven't profit take this move yet. Where are we going? Somewhere down there. Then where are we going? Who knows? But I want to see this down here within the next 2 weeks, because if we're going to do a Santa rally, we need to get down and get back up and break that high within 4 weeks. We've got 4 weeks to go. It needs to do it today. We need to start this move if it's going to happen. Otherwise, I think we're just going to do that and fly off on a Santa rally for 2 or 3 weeks. But this market has no idea. It doesn't know what it wants to do, does it? Look at last year. We didn't get the Santa rally last year either, did we? You know, someone was saying in the Telegram group earlier, we'll be getting a Santa rally. That's what we all thought last year. That's what we normally get. Everyone that did the Santa rally last year has now got a job somewhere else in McDonald's because they've blown their accounts. It's got to go with where the market goes. If the market's going short, go short. Which today it's thinking about. We've got 2 minutes to the news. So we'll see where we spike with the news. And we'll see where we get to. Okay, 50 seconds to go. The other danger of DCAing into indices is when indices trend. So, I mean, this is the thing. There's 2 different types of averaging in. The one where you averaging and try and get out today and then go, that didn't work, and scrap it. The type where you're averaging in and you just keep averaging in until you're getting out, which is kind of position trading. If you had shorted that there and you're averaging into it, you're dead. This is the problem with stock indices. Stock indices trend. FX markets trend, but they also come to an end fairly quick. They don't trend like this. You know, this is why I don't trade commodities position trading wise, because they just can go nuts. Okay, news is out. I'm waiting for it to come up. It's not coming up. Uh, 102 positive. So that should, if the market's going to react to it, it's a very, very small hit. 1%. It's not a bad variation. So if the market is going to react to it, we should see a pop in the US and a drop in the indices. See what it does. A lot. That's frozen. Not a lot of movement in the indices. Just ever such a slight bullish 5-minute candle, but nothing. It's not moving. That's not moving. That is moving. The market is still moving. This terminal's just frozen. Come on. Oof, talk about disconnection. Right, well, it is still moving. So indices are coming down. When I would attempt to hedge, I would have to offset each position's size to get in because of FIFO. Bringing my break even closer, but I have to peel off my entries from the first to last. What the hell has happened there? So yeah, no movement off of that. Look, as you can see, Dow's coming down a little, or trying to come down a little bit. No real movement on the indices. More monkeys on computers, yeah. Yeah, so one of the other things you can do, obviously, with hedging is you could use, if you've got FIFO rules in the US, one of the things you can do is use the NASDAQ and the Dow, the NASDAQ and the S&P together. So with these two, you could take, obviously, depending on what happens, obviously, if the indices just break nicely, as they have done many times in the past, but for the last week have decided just to go sideways completely with no volume, you're fine. If we get a position where we get hedged, what you could do is you could have short only set on the EA on the S&P and long only there. So basically you hedge yourself across these two indices because they go the same way at the same time pretty much, don't they? So you could use the two. So take a break, only long on that one or only short on that one. If you hedge, you can dollar cost average into both of them. And then you can adjust your positions accordingly. So you can use these two instruments as if they were one. That's the only other thing you can do. So you can set the EA, obviously, in the settings in here to go long only. You could go long only on that, short only on the other one. There's an option there. Evening outro, afternoon, morning, depending where you live. So we've pushed back up inside opening range. So US dollar dropping on that positive news. This is the thing with the US at the minute. I'm really not sure. The market seems like it wants to sell the crap out of this, doesn't it? Newcastle having a week off trading. What are you doing in here then? Can't have a week off trading and then hang around trading rooms. Not that I don't want you to be here, obviously, but okay. So US dollar basically dropping on the news. Indices trying to push back up at the moment, but not really getting anywhere. So that's the news out of the way. This is just becoming a nightmare. These whippy opens where we just don't get any movement. There's just no volume at all in the market at the moment. There's a lot of volume, just no direction. Just stuck. Exactly the same as we had on the DAX. Market's just not wanting to go anywhere today. Hopefully we break short, but we'll see. What can you do? Going to get started with Darwin X next week. You're going to need some volume because you're only going to get 30 to 1 leverage. Well, some capital rather, not volume. Okay, so we've got push up inside the range on the NASDAQ and the S&P and the Dow already as well. Not that the Dow actually left the range. So the Dow actually never left the pre-market range, whereas the others did actually manage to get out the lows. But we're inside bar now. So we'll see where we go from here. That initial knee-jerk reaction on the US was negative. It should be positive, which should bring the indices down. So I have to wait and see where we go in the next 10, 15 minutes. Just reduced my range to 5% on the stock index hedge. Works sometimes, doesn't other times. Yeah. Works down the NAS 2R. Yeah, would have done. At the moment, we do seem to be getting, this is, somebody was saying, I think in the Telegram group this morning about it, there is no setting for any EA that's right. It's different. That's all you're ever going to get with any settings you use on any automation in trading. Every day, there's going to be a setting which was better than the one you used, or there's going to be a setting which is worse than the one you used. But you're never going to get the right setting every day. You can use a setting. That's it. If you reduce it to 5% today, fantastic. Over there, probably not too bad either. Not too bad over there. Go back to yesterday, you probably would have got whipsawed on 5%, whereas I didn't get whipsawed. I got a 2R target on the NASDAQ yesterday. You would have done probably on the 5 actually as well. But if you increase it, you're going to get different results. But every single day is going to give you a different result. All the testing I did gave positive results with virtually all the settings. It doesn't matter whether your range is 5, 10, 15%. It doesn't matter whether you go for 1.5R, 2R, 2.5R, 3R. It doesn't matter whether you use aggressive exits or not. Some days they'll work, some days they won't. You've just got to trust in the long-term edge. That's it. And use a setting and stick to that setting. It doesn't really matter either if you change settings every day, because the odds of the setting that you use each day being right is a percentage, isn't it? You're never going to know whether you should have used this or that. My offset today here, if my offset had been 3 times bigger, I wouldn't be in a hedge now. So what am I going to do tomorrow? Set it at 3 times bigger, and then when it does a clean break tomorrow, I'm not going to get as much profit because I used setting 3 times bigger. Yeah, it's different every day. You just can never tell. But certainly in tight contracted markets, using a tighter range size obviously is going to be better. And this is the downfall of ADR. ADR is a fantastic measurement tool for basing all of your trading on everything around, because it is the average movement of the instrument that you're looking at. The Achilles heel, as every indicator on the planet has with ADR, is it's lagging by 10 days. So where you get a condition as we have at the moment in the Dow, we're measuring the average daily range of the last 10 days. Sorry, that's not right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, it includes a 325 ADR day. I think it was something like that, wasn't it? What did we get? 654 on a 234, so 300% of ADR. So our ADR 10 tomorrow, that ADR 10 figure tomorrow is going to drop dramatically because that gets taken out of the equation. And all of a sudden, your ADR ranges are going to be much tighter automatically. So then you could say, right, well, let's use an ADR 5. But then what happens when the market expands rapidly is your ADR 5 figure is thrown out more than the ADR 10. All my testing I did with everything between ADR, I never tested ADR 5, but yes, I did. Sorry, no, I did, because it's 5 trading days. I tested 5, 7, 10, 12, 15, and 20, because it's 5 trading days in a week, I think it was. I settled on the 10 because there was that much difference in it long term. But you're going to get outliers, always going to get outliers where there's something that's going to skew your figures. You look at big news events with RSIs. They massively skew your figures. when you get these big news days. Yeah, look at that. We went from 60 on ADR, on RSI, to 85 in 1 hour. That's an anomaly. That's an outlier. That's not normal. We base our normal movement on normal price action. Abnormal price action ruins everything. So, and that will change, that ADR figure. So when you look at this number tomorrow, which is now 2361, that will be a lot smaller tomorrow because we'll be taking that huge 300% ADR day out of our average calculation. That will drop. So therefore, your 5% that you're using now will be super, super, super tiny tomorrow. So it really won't matter what it is. A normal candle will probably take you over your max range tomorrow. Yeah, it's never unless you're physically looking at it and doing everything manually and adjusting everything every day, then you might as well not use automation, should you? Do it yourself. Yeah, that would have been a lovely break. So if you'd have taken a 5% break today, you'd have got something along those lines. Maybe even tighter than that, probably, wouldn't you? Yeah, 2R. That would have been your pre-market range. And you've got a 2R break on the NAS. You wouldn't have got it on that one. You'd have got 1R on that. We are still not going anywhere. US dollars retracing. So we are getting that strength coming back in the US, but at the minute, all we're doing is we're returning back to where we were. So we'll see if we get any continuation on this. If we do get continuation on this US strength, we may well get a drop today, but so I just noticed that I'm going to get a reversal alert on this. 44. 38, yeah. So I'm going to take another position on US dollar Swiss when that reversal alert kicks in. So next reversal on the US dollar Swiss, I should be getting long. That'll be fourth position on that. Right. Retesting the opening range high or pre-market range high on the Dow and the S&P. Big orders coming in now. Look, DAX just got a big pop there. Okay, good rejection on the Dow. Tried that breakout initially. They've just added more into that. So that's good. If we can hold this candle down, we've got 3 minutes left yet. Obviously, this is just the start of this candle, really, halfway through the candle. So, but certainly looks like the orders are coming in short. Should we put tick strike on and have a little listen? So listening for sellers basically coming into the market today. Just making sure I turned it on then. No volume, is there? We've got a meme for that. John's dodgy thumb. Thinking about it, isn't it? It is thinking about it. Look, everything's thinking about it at the moment. Just not able to make any headway. God, remember the good old days when news used to come out and the market used to spike 150 ADR? We used to go, this is easy. You're lucky to get half an ADR on a news spike at the moment. It's just like pulling teeth. What can you do? This is partly why I'm thinking in the new year I'm going to start sessions, basically. So we've got something to talk about while this thing doesn't move. Have something different to talk about every day, basically. Because this is becoming painful, isn't it? At the moment, what we seem to do is we get a quick 2-hour move, then nothing, or we don't get a quick 2-hour move and nothing. DAX is a prime example at the moment, isn't it? Look, just literally all we've done since the market opened this morning, is we've done the gap fill, which we looked at this morning as the possible move today. And we are literally there. So we opened there and we're there all day. Let's talk about the indices pullback before the Santa rally. Then the New Year market correction. Yep. That would be nice. We're going to have to go back a couple of years to find one because we didn't have one last year. We're going to have to go back to December 2023. So this is last year's Santa rally. Which didn't happen. So the December was there. So we started. Let's mark it properly so we can see what the hell we're talking about. Yeah, so that's the beginning of December. And that's the beginning of January. So that was our Santa rally last year. Everyone was like, here we go. Dead. Yeah. And then what we normally get after the Santa rally is a January correction. What we actually got was a January rally out of a Santa drop. But if we go back to previous years, in fact, we did get one, didn't we? Yeah. Just. So that is the previous December. That was the Santa rally, basically, into Christmas. So it started literally the week of Christmas. We had a massive, massive, massive spike. So, you know, a big rally into it. We had a big rally there as well, but then a correction and then a pullback, then a push back up again. So we did get it kind of in 2021, just about. But what typically happens in January is you get this pullback. Yeah. So this is an unnecessary stock purchase, which always happens in Christmas. I don't actually know the reason for it, but it just does. It's just one of those things that we get in the markets, one of those anomalies. So this was the year before. See, this is going back into, now we're in COVID. This is the first COVID year. Again, it wasn't particularly great there, was it? Look. So that's the beginning of December. Actually, that's the beginning of December. That's the end there. So kind of like flat Santa rally, wasn't it? But the idea is December, all you do is you buy every dip. Yeah. No matter how small it is, you just buy every dip, basically. And virtually all the time, you will be fine. However, as you can see last year, we weren't expecting great things and we didn't get them. So this year is a very difficult one because if you look at where we are this year, we've kind of had this unbelievable November rally, which would indicate we're going to drop for pretty much all of December. So I can't see it myself, but who knows? We're totally stuck on these indices. They're not going anywhere. Dow's trying very hard to get back to that pre-market high. NASDAQ's not interested. The S&P's having a crack as well, but they've all gone on holiday. Have you ever tested a strategy on engulfing candles? Yep, many times. Achieving 1x the range. Yeah, doesn't work. I mean, you can see on the chart here. There's an engulfing candle, failed. There's an engulfing candle, hasn't worked out so far. But you've had an engulfing candle there. You had one there that worked, but because you got out at 1R, you missed all the move. Yeah, it doesn't have basically any strategy you test with a 1x risk reward ratio has to have a 50% strike rate or more. You will always have a period where you don't get it. Look at now. If you go onto these indices now, yeah, onto the hourly chart, there's no way you would ever get a 1R out of any of this. You just get 10, 15 losses in a row, 15R loss. You're only making 1R every time. 15R losses, never going to happen. Never works. I've tested every candlestick pattern under the sun. Nothing has a strike rate of 50% or more. Just doesn't happen. This is worse than the Asian range. It is. It's terrible. It looks like it's thinking about going long. It's only thinking about it, though. Talk about the new hedge strategy. It's not so much a strategy. It's me playing with a strategy. So it's very, very simple. I'm just basically working on the maths. It's all based on math. Everything I do is based on maths. But I'm just testing the tolerances basically of ADR range breaks, basically. So what I'm testing is we know that price stays within its average daily range for 58% of the time. So if price is going to stay within its average daily range for 58% of the time, we can make money out of that because we know that there's a 58% chance that it isn't going to go beyond ADR. But we know there's a 42% chance it will go beyond ADR. Yeah. So if it's going to go beyond ADR, we know it's got to move at least half an ADR to get there. Probably more, basically, if it goes up and down. So if you take this calculation here, which is basically, you can see ADR is 75. The ADR range here is 14. So basically, I can't remember what I've got this set on. I think I've got it set on 10. Yeah. So this is taking 20% of the average daily range. So that is 20% of the average daily range, right? So if we were to assume that at some point it's going to move today to go to ADR, which it does 42% of the time. Yeah, we've got an edge there if we can get more than a 2R on our trades. Very simple maths. Yeah. So 2R, 42% of the time, is a positive risk reward ratio. The equity curve will be positive. That's it. It's simple maths. Yeah. If we know something happens 42% of the time and you get a 1R ratio on it, it's a loss. If something happens 50% of the time, you get a 1R ratio on it, you get a break even. If you have a 2R ratio on something that happens 42% of the time, you have a positive. It's an edge. That's what edges are. That's what trading is all about, finding edges. So all this is doing is it's basically taking 20% of the average daily range, using it as a range. So we take a time of day, we go 10% above, 10% below it. And when the market moves and breaks that level, if it's going to go on its way to ADR that way today, happy days. If it's not, and that's not the way it's going to go, we go, all right, well, if you're not going down, you must be going up. So if you're going to go up that way, we'll get up there. But what we're going to do is we're going to increase the size of that position using a lot multiplier so that we don't have to get all the way to ADR. We can get part of the way to ADR, which is what it does 58% of the time. So the strategy basically goes break short. If we're going to do what we think we're going to do, we've got a 42% chance of that happening. If that doesn't happen and it goes the other way, we've got a 58% chance of that other thing happening. Positive edge, positive edge. Yeah. That's literally all it does. It's very simple. It's all about maths. It's all about extracting money out of the market via market movement. We know how the market moves. We just need to figure out how to extract the money from the movement. Yeah. We don't need to be clever. We don't need to find a set of 25 indicators, which when they line up perfectly, you go long and then it stops you out. And it's not what it's all about. This is what everyone's trying to find, the thing that you can put on a chart and make money. What we need to do is find out how to extract money from what we know. It goes up and down. We know it goes up and down by percentages. So it's very easy to work out the maths as to how to find an edge. So what this is doing is it's hedging itself when it gets a directional break and making sure that when it's moved far enough, we have a positive outcome on the trade. What we have to worry about is our drawdown, because if the market were to go into pretty much what we're seeing on the DAX and the indices at the moment, a period where it just goes, I ain't going anywhere, you will die, because you are exponentially increasing your lot size continuously until you're dead. That's what martingale is. This is why martingale doesn't work. Using martingale works sometimes until it doesn't. Using partial lot multiplication works the majority of the time. So at the moment, all I'm doing is I'm testing tolerances on lots of different instruments using lots of different times of day. So for example, here I'm looking at the Aussie dollar CAD and I'm using 7 a.m. UK time before the stock index opens, or as the stock index opens in Frankfurt. I'm using that time on an Australian pair because the movement should have been over that Australia's causing by the time we move for London. And London is going to move, or New York is going to move the CAD. So the Aussie should go quiet, and then we should get a Canadian dollar movement at some point during London or New York. So you've got to pick a strategic time of day dependent on the instrument that you're trading. This is all to do with FX. Yeah. So you can see it's just gradually accumulating money down here. Yeah. but I'm looking at, we've drawn down by $24 so far. We've made $102, $110. But what we're doing is, you can see this is the total drawdown on the account. Yeah. You're never going to be heavily in drawdown because you're always hedging yourself. So what you're doing is you're just taking a slightly bigger risk every time you're wrong. But you're not martingale. Martingale, you'll be, I mean, I've proven the point over multiple pairs. You'll be dead within months. It's not going to happen. Yeah, you can't do that. So, so I'm just testing the tolerances with different pairs, basically over different periods of time, and just watching what is going on. So, you know, it's a case of, am I getting to any amounts of money where I would be thinking, holy crap, that's a problem? No, I'm not. And I'm also testing how long these positions are taking to work out, because as we know, as we've seen with the S&P 500 and everything at the moment, you get in periods where we're sitting sideways for 4 days. So how long have I got to sit through these things? The other thing that I'm testing as well is I'm getting these results when I've got them, and I'm extracting them and putting them together as a portfolio. Yeah, which is why I've called it Portfolio Hedge. Because on days where you're stuck, for example, here in $100 of drawdown or whatever it may be, there will be 3 other instruments that I'm trading in a portfolio which have all just gone clean breakouts like that. So I can just close that out and go, oh, that didn't work. We'll start again tomorrow, using the profit from all the other positions. So you're treating the entire hedging ecosystem as, if you like, as a portfolio approach. Yeah. So it's kind of a culmination between position trading, treating your account as a portfolio, and hedging, which locks in these drawdowns at very small increments. It's much more mechanical than position trading. But I'm working out basically how to manage risk with it. That's the big thing. Because obviously, depending on your account size, this is just taking 0.1s, I think. Yeah. So it starts with a 0.1 here. We're trading on a 100K account or something stupid. Oh, this is a 10K account. So I'm just testing what happens to the P&L. They all come out as positive, but they're all only coming out over a 6-month period with something in the region of 1,000 to 5,000 in profit on an individual instrument. Sometimes it's less, but every instrument is doing that. So if you can make only 1,000 in 6 months on an instrument using tiny risk of 0.1 lot sizing, but you can do that on 28 pairs, all of a sudden you're making 50 grand a year. However, I need to test the tolerances across all the instruments, and I need to do this over a much bigger period of time. This is running slow at the moment because it's in visual mode. When it's not in visual mode, it runs 1,000 times faster. But I'm just doing visual tests basically to see what we do. So, you know, for example, here I'm sitting in 4.94 lots with $250 of drawdown. So this thing's chopped me around for days on end. The worst case scenario is I've got $250 of drawdown on my account. It's not the end of the world, is it? But it very rarely loses. And this is what a lot of these martingale EAs do out there. They use double the lot size. And this is why they blow the accounts all the time, because they're using double the lot size. And they're not using mathematical equations to calculate the movement of price. They're basically using pips, which is utterly useless because pips, as I've just shown you, change dramatically. So this uses ADR. Every time it starts a new cycle, it looks at what the ADR is and it adjusts itself, its targets and everything to what that instrument is doing. So if the Aussie dollar CAD goes into a period of that, we will adjust our ranges accordingly. Yeah. So everything's dynamic. So therefore, you shouldn't get to a point where it is out of sync with market condition. It's always staying within market condition because it's always monitoring ADR. So that's basically what it's doing. Very simple. It's just simple maths. We know the statistics. We know the equations to make money. It's just trying to figure out a way to do it with hedging. This is what I do basically. This is what I spend my days doing, is jumping from system to system, as I say not to do, but using stock index hedge theory. How can we apply this to FX? You can, but you can't apply it to FX with a standard hedge. There might be ways to do it, and there probably is, but it's just looking for nice, easy ways to stress-free ways to make money. Here you go. This is a perfect example. 3 days totally sideways. What's happened? What's the worst thing that's happening? Got $100 of drawdown. That's it. You're not going to move? Fine. Stay there. I don't care. Stay there as long as you like. Doesn't bother me. I'm hedged. Worst thing you can do right now is hedge for longer. Oh, you got me out with a profit. Thanks. Start again. That's literally what it's doing. And look what it's done. It's gone nowhere for 4 days. So it just sat there and waited for 4 days. There we got a clean break short. Much nicer profit. But it's not going to set the world on fire. It's not going to make a fortune. It can't do, because it's sitting in drawdown for days on end. But it's not losing money. Think about the problems all traders have. Over trading, over leveraging, losing, revenge trading. It's all about not finding a strategy that makes money. It's finding a way to iron out all the things that make you lose money. You lose yourself money by doing things wrong. If you can find ways of not having those revenge trades, those fear of missing out, everything that makes you wrong as a trader, remove them, and you suddenly will become profitable. If you've got a system which just waits for the market to go, and when it goes, it has a mathematical equation to make a small amount of money out of it, bingo, you win. Just got hedged on the NASDAQ. Triple hedge day today. Haven't had one of these yet. This is the first day I've had a triple hedge, I think. Upside targets on the NASDAQ going yesterday's high. This isn't working. It's whoa. I was just going to say, 6 strikes not working. I haven't heard it tick. That locked up. Scared the life out of me. I was going to take that off now. Don't want it anymore. Too scary. It's like being in a horror film. So NASDAQ going yesterday's high, just under to the upside. Downside is pre-market lows. I mean, it's very dangerous, these pre-market lows and yesterday's low, because they're so close. That's where I would look for price to react to the downside. It doesn't look like it's going down. It looks like it's going up. So that's not going to be a problem today, I don't think. Right. So yeah, targets all in place. TP hit on the Dow already. Okay, so I set a really, I set a yesterday's, this is the problem, look. Set yesterday's high target. So I'll be looking to get in and scale in with an aggressive exit on this one now, on the Dow. This is quite a dangerous position. So, if this thing's going to rally away like a lunatic, which it is, I'm just going to go into drawdown on it. So I will wait to get the aggressive short on, and then I will look at re-hedging it. Looks like this is flying now, doesn't it? So what's just happened? If inflation consistently declines, there is no reason to insist that rates remain really high. Good economic arguments that if inflation continues falling for several more months, you could lower policy rate. Okay, so first confirmation from Waller there that we might be getting lower rates before May next year. So that's massively negative US. He says US dollar CAD sticking exactly where it is. Okay, US dollar Swiss coming down. Pound US dollar should be rallying. Euro US dollar rallying as well. There we go. CAD Swiss, ADR. That's not good. That means that's coming down. Euro US dollar rallying to the upside. CAD Swiss collapsing. So ADR hit on CAD Swiss. So this is all negative US. Again, confirmation of those CPI figures. Continuation on the US dropping. I think I'm going to have to re-hedge this. This is. I'm going to give this another candle. I'm going to wait for this candle to close. Then we need to be looking at wider targets on this. So last week's high, which is just under 5R, is going to be upside target. Adjusting targets on my other account. Yeah, so upside target, S&P, 5R. Let's just see what the yen's doing on that news. Not a lot. Swiss franc is powering up. Aussie dollar also powering up. Big pop. US dollar yen dropping. That's just the US dollar dropping. Okay, so we'll see if we hold this move. You can see from the US dollar CAD that the US dollar and the Canadian dollar are both dropping at the same rate. That's not going anywhere. So US dollar brings the CAD down. So we'll see if we get a pullback on this. So we're just tapping into yesterday's high on the S&P. I need to zoom out a little bit on these so I can see where everything is. So it wasn't the rate that moved the market, or rather the result of the survey. It was Walla today. JP Morgan forecasting a meandering sideways ranging market for around 4 to 5 months, are they? Isn't that what we've had for the last year? Pretty much. That's just kind of confirming, yeah, what the sort of conditions we've had for the last year or so. Yeah, we reckon we're probably going to carry on doing that. It's not much help, is it? Probably true, though. Higher consumer spending, bigger profits, prices, stocks, indices go up. Higher spending doesn't make stock indices going up. Higher stock prices make stock indices going up. Bigger profits, definitely. What happened to your moving averages strategy? I don't remember a moving averages strategy. Pound CAD, ADR. So CAD Swiss is your first ADR, pound CAD. The upside. Moving average strategy. Not sure what that was. Can't believe that I entered GJ short last night, right at support. Yeah. But it's an hourly reversal alert. So, you know, look at the market structure. There's nothing wrong with that as a short. apart from the news. Brian, it's hard to trade on a phone. Re-entered short just now. Yeah, don't try and trade on a phone. That's quite tricky. This hedging strategy you're testing on FX could be good on prop because if you blow the account, you can restart when you're winning. You can withdraw. A lot of prop firms won't allow you to do this, the strategy that I'm testing, because it uses martingale. Well, it depends what they class as martingale. Martingale, the definition of martingale is doubling your bet. It's a betting strategy. It's gambling strategy. So it's doubling your bet. Every time you make a loss, you double your bet to win back your losses. Yeah. That's the definition of martingale. Some prop firms consider martingale entering a position when you are in drawdown or of anything higher than the original lot size taken. So you could go, as we do with the stock index hedge, you could go one lot long, one lot short, one lot long, no problem. If that's a 1.01, martingale, dead, blown. Yeah. So you got to check. That strategy I've just shown you does not work as a standard martingale strategy. You would never get out. You would just increase your lot size until you blew your account. It doesn't work. It's got to use a lot multiplication because it's working on the mathematics of you cannot stay within 42% of ADR forever. Yeah. So all this is it's all that strategy I've just shown you is working on fact, mathematical fact, that we do not stay within 20% of ADR, or rather in this case, 50% of ADR, because I'm using 20% of the range and I'm using a 2.5 multiplier to get out of the position, 50%. So we do not stay within 50% of ADR for long. We break out. When we break out, we close out. Yeah. So I'm using the mathematical statistics of average daily range to formulate a strategy. That's all it is. I know it works. I've got mathematical data to prove it works. I'm just testing variances and tolerances at the moment. Prop firms won't let you do it. Why? Because it bloody works. Otherwise, you wouldn't pay for any more demo accounts, would you? Any strategy that works, not allowed. I'm going to go into drawdown by more than 10% on my account at some point because I'm a trader. No, you can't do that. Why? Because if you go into 10% of drawdown, that's normal and you'll probably come out and make 20 or 30%. That means we'll have to pay you. Okay, put a little rule in place to stop us winning money then, shall we? I had a plumber over. Did you respond to what I said about engulfing candles? I did, yes. You have to go back, outro. No, it doesn't work. Oil going up. Is it? Oh, hello. So US dollar going down, oil inverse, obviously. So, yeah. Hopefully that continues. Right. So, sorry, I just need to concentrate on this short on the Dow because this is the one that I'm looking to get aggressive re-entry on. So if I do get this triggered and I don't get out on a pullback into propulsion, which I would imagine will be that break there. So I'm looking for that move basically to exit that. If that triggers, I'm going to need to re-hedge it because I've got a feeling this might run today. And if it does, we do not want to just go into drawdown on that. It's going to kill my month this week. One of those weeks. US dollar yen puking, yep. Since we're consistently living X of DD, if we make the MRA do the exact opposite, wouldn't we be consistently living on X in profit? No. The strategy, the moving average strategy was where you enter on one moving average and exit on another. Yeah. It created alpha, but not enough. It wasn't generating enough profit. Yes, I remember. That was a 20 entry, 9 exit. Yeah, it did produce profit. It did work, but it didn't use ADR, so I scrapped it. So yeah, no, it didn't work. It did work, but it didn't work. Didn't work enough. Just got out of a DOW position I've been in since the 16th of August. Blimey. How have you been in the DOW since the 16th of August? Oh, because the Dow's been going up. 16th of August? You mean you've exited it at a loss? Oh, right, okay. Okay, so you've been in it since, so you've been long since here. Well, at least you're out. On the ORB strategy, can I have ORB1 and ORB2 as 2 separate entries at the same time? Yes, of course you can, yeah. Yep. One TP at 100%, one TP at 300%, yeah. Can put it in the strategy tester and test it. Which prop firm do I recommend? The Bank of You. Thanks for subscribing, Rowan. Welcome aboard. I don't know which prop firm to recommend at the moment because I don't know who. I don't even know if any of them are legit anymore. E8 is the one that I would use at the moment. If you want to trade futures, take Profit Trader. But if you can steer clear of prop and use your own money, do that. Okay, we're pulling back nicely on the NASDAQ. And we are pulling back on the S&P ever so slightly as well. Haven't got triggered yet on the Dow. So looking for propulsion to hold here. And a new leg up to start. So triggered short, loss recovery target 119 on the Dow. Matt Kors does this thing on prop where he places trades at market open with a tiny TP. It either hits or blows the account and he'll restart. He hasn't lost since he started. Yes, he has. Must have done. That's why FTMO has the 2-minute rule. You can't get out within 2 minutes because they can't replicate it. Only 11 days ago he started. All right, okay, yeah, well that's fine. Yeah, anyone can be lucky for 11 days. It's gambling, isn't it? Basically, he's going red or black, red or black, red or black, red or black, red or black. Good run, good run. Not sustainable. Okay, so just been watching this to re-hedge. Okay. I'm not sure I really want this aggressive position on here. With the market reversal, does it have the ADR in it, or do I have to buy that as well? Market reversal indicator, it's nothing to do with ADR. All the market reversal alerts, sorry, I just need to watch this. All the market reversal alerts indicator does is signal reversal alerts. That's it. It's a signal indicator. Nothing to do with ADR. ADR is this indicator here that draws the ADR levels and extensions on your chart. Okay, I'm getting out some of those shorts and flipping long on it. I'm going to leave these two hedged at the minute. I don't really that aggressive. This is what we were talking about earlier with the aggressive exits. They are aggressive exits. They're called aggressive exits for a reason. They can cost you a hell of a lot of money. If this thing now rallies beyond ADR today, and I have 4 shorts, that drawdown is going to be ridiculously high. Yeah, like painfully high. So this is why when the stock index hedge EA triggers a hedge, it moves your TPs to TP2 as far away as you possibly can. Not as far away as you possibly can, but a very good distance away. We know that 42% of the time, we're going to hit this line. Yeah. If you get out of your shorts there and it moves there, that's 4 times the risk because you've now got 4 shorts on, not 2 shorts on, going that way. Yeah. So this is why I keep saying, you hear me say that looks like a good support level, but it's too close. 1R. I'm not getting out at 1R. This thing can go way, 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 way more than that. We've seen it many, many times. So that's a prime example. So I'm basically out of 2 shorts. I don't think, obviously, the news has just changed the outlook on potentially what this could do today for me anyway. So I'm out of those shorts down there. I've still got those aggressive shorts on there, but I've flipped long up here and looking for it to rally. If this now chops around and starts to drop again, I can always re-hedge short. But these propulsion gaps, this is a big move. So these propulsion gaps, I think, are probably going to hold, and we're going to add more weight into this here. But you just got to be aware of what the US dollar is doing. If suddenly this US dollar turns tail and runs back the other direction, bear in mind it's just had good news, although Waller has just really stamped on it. And this corrects all the way back down to here, the indices are going to do the same. So tricky trying to read it today. I don't know if anybody's mentioned this to you yet, but TradeLocker is looking for people who have built EAs on other platforms to convert them to theirs. TradeLocker? What's that? Just another trading platform. So Trading View charting. So it's a platform that's got Trading View in it. Not heard of it. Become the hottest trader. Make moves with TradingView. What is it? So it's a trading platform that uses TradingView. Why not just use TradingView? If this is a trading platform that incorporates TradingView in it, what's the advantage of using this over TradingView? I'm confused. AI integration. I don't know what it is. It doesn't make sense to me. It's like me building a piece of software and saying, hey, it's got MT4 charting in it. Why not use your MT4? I don't know what it's doing. I don't understand. Am I missing something? Open a brokerage, open a prop firm. Open a brokerage. Are they is this a broker? Sorry, I don't know who these are. I'm discovering them for the first time. Is this a broker then? Is it? Oh, is this that company that people have been? Things are starting to fall into place. This is that company where people have been saying that my broker prop firm is dropping MT4 and they're using Trade Locker. I'm sure they are because they're a they can make you a prop firm. So it's basically a trading platform that uses charting from TradingView that you can white label to set up your own brokerage or prop firm. Licensed to rip people off is what I call it. No wonder they want you to convert all your products into their system because they're probably struggling to find people, aren't they? That's create your own trading challenges. Hey, let's start a prop firm. How much does it cost? This is the problem with this industry at the moment. It's too easy to set stuff up to take people's money away from them, isn't it? Look at it. On-chart trading. Trade size input options. Custom scripts. Copy trading. They're going to introduce trailing stop losses. Oh my God, it's going back to the dark ages. Not for me. No, not for me. Sorry. Then the EA that does the H1 set file. The market reverse alerts EA. Sorry, what was the question? I get the question. Oh, it's a confusing session today. With the market reversal, does it have ADR in it, or do I have to buy that as well? Right, well, if you're using the EA, you don't need to buy anything because the EA is all-encompassing, does everything for you. But you're not to look at the EA. The EA is to be put on a chart and it trades for you. It's not a visual tool, but it does incorporate ADR. Yeah, so it shows you ADR on the input, on the dashboard. And if you are using ADR in your trading settings with the market reverse alerts EA, it will plot ADR. But it will only plot ADR if you've said, I want you to use ADR as a filter. Otherwise, it won't show ADR. Yeah? Does that answer the question? I think it does. I think that's what you're asking. For some reason, on the strategy tester, it's not placing orders, only painting lines on the chart. Sent you my set file on Telegram. Basically trying to test pre-market 15 with TP1. Okay. I'll have a look. Yeah, I think I've answered your question, Rajiv. Okay, so we're running hot to the upside. So if you want to, you have an option now to close your shorts out. If this is going to run, there's two options, two ways to get out of a hedge, basically. You can either go, this is going long, shut your shorts, wait for it to go long, shut them, job done. Or you can wait for it to go long, get out, and take a reversion. If you exit the shorts now, so for example, if I close these out, I'm going to take a loss of whatever. And then if it does then drop, I'm going to have to re-hedge it up here, which means it's a double loss. So your choice as to what you do and how you exit hedges, basically. But at the moment, it's not convincingly going anywhere. But to me, these look like they're going up to date. We've got a fair decent amount of movement off of that Waller. Announcement. I favor hiking rates if inflation progress stalls. Right, so Bowman has just come out and basically disagreed with Waller. So Waller has said, hey, if inflation keeps coming down, we can drop rates earlier. Bowman's come out and said, if inflation doesn't come down, I'm all for hiking rates. Totally the opposite. It's quite possible that the Fed policy rate will need to be at a higher level than before the pandemic to foster low, stable inflation. So Bowman now coming out and saying, not only do we think that we may have to hike rates if inflation stagnates, we might have to do it anyway. Fed swaps in 5 basis point additional easing on day for end of 2024. That doesn't make sense, that statement. So now the market has said we might increase rates by the end of the year. How are you meant to trade with this information? Literally, they come out and say one thing, then they go, nah, didn't mean that. It's lunacy, isn't it? Gonna make it up. The Fed. Right, so there's every chance this is going to drop because the US dollar might rally because they're going to put interest rates up again. Unless I'm reading that wrong. This is just like total lunacy manipulation today, as it always is. But so to re-hedge this, basically this one here, I need to add another couple of positions short because I've got 4 longs and 2 shorts on at the moment. Who knows? Anybody got any ideas? We need our we need John Wick. Not a clue, is he, today? Putting a re-hedge on. Looking heavy now, isn't it? The Fed monkeys on computers. Absolutely. I'm not reading that wrong, am I? If inflation continues to fall for several more months, we could lower our policy rate. We're on 3.2. Our target is 2. We're coming down at 0.5. Boom. Looks like rates are dropping. That was at 338. Less than 10 minutes later, Bowman, I think we should hike it. Fed, I think we should drop it. Bowman, I think we should hike it. 10 minutes later. It's quite possible that we need to go to a higher level than before the pandemic. Well, we know that, but we're already there. That's just makes you cross, because there is absolutely no way of reading that. So as you can see, now the market's like, what? Confusion, total confusion. They should just shut up. We shouldn't be allowed to have talking heads. They just ruin everything. So 940, 950. Okay, so I can get out of these today. Basically, we need a push up. I need a push up to get out of this today. So all these longs, basically, if we can get a hit on ADR today, that gives me kind of a who-ish profit up there. Just need to put those in a sec. 33.46. That? That's because I put it on a sell. 33.46. Okay, so that gets me out of the Dow with a nice little profit. So basically, I've got 4 longs, 2 shorts. That's the hedge. So I'm 900 down. That hedge is virtually nothing. So if we can get a nice run up to there with those 4 positions, that'll cancel that out. Gives me a profit on the session. The other 2 hedges I'm just going to leave running because I think we're probably going to rally to the upside. So I'm going to watch the NASDAQ for a rally up to that high, which is yesterday's high. So that is only 2R, but ADR is up there because we'd already made progress today. So I'd be quite happy to get out with a 2R on that and then try and get a little bit of a pullback. Failing that, we're going to go up there. So I'll watch it. I will exit there and I'll look to re-hedge if it does look like it's going to continue to run. But from what they've just said there, just confused the market further today, basically, with that statement. So that one's working. So S&P, same thing. I'm looking to get out just under the weekly high. So we're up at yesterday's high at the moment. We've got the previous day's high there, and then the high of Thanksgiving, which is pretty much nothing. So this whole area here is potential support. If we break through that, we're probably going to get a quick pop, which will take us up into the weekly high. Then we'll get some limit orders triggering at the weekly high, which will try and get out. So that's the plan. We will find out how it works tomorrow, if it even gets a break. Not even convinced this is going long now. Anyway, so FXY is obviously haven't managed to get out of anything today, unfortunately. So just sitting in everything at the minute, waiting. Obviously, that US dollar move hasn't helped me very much. So there's that extra position I've just got on the US dollar Swiss. So that is position 4. And obviously, it's dropped away off the news spike. So next stop for US dollar Swiss is these lows down here. So we've got double bottom there, which is just under 150 ADR. So if we can get a rally down to 150 ADR, that will push those indices up to target, which would be lovely. We can get another position on, then try and get out on a pullback. So that's the plan. We will find out how it works tomorrow, if it even gets a break. Not even convinced this is going long now. Anyway, so What a mess. Total mess at the moment today. Pulling back again. Look at it. Somebody needs to go and do. I watched Back to the Future musical on Saturday in Covent Garden in London, and just brought back that bit where Biff grabs McFly, knocks on his head. Hello, anyone home? Somebody needs to do that to the Fed. I have no idea what they're doing, do they? Right, so I'm going to leave it there today. See how we get on. I'll post in Telegram what happens with them, assuming something does happen with them, obviously. And we'll come back and see what the market's made of this tomorrow. I get the feeling we'll get a move one way or the other today on this. I think the market's at the moment kind of absorbing this information, and we'll probably get a move. It looks like the US dollar's dropping now. Look, we are starting to push back down again, so that will rally those indices. Be a little careful today. We could get a very big, strong move today. If we do, it could be a painful one. So just be a little careful. Don't scale in too fast, too hard on anything. Keep things spaced apart. And we'll see how we get on tomorrow. But certainly nice rallies coming against the US at the minute. CAD Swiss is holding up. There's just confusion, total confusion here. Look. Don't know where we're going, do we? They've thrown a spanner in the works on us today. We'll see if we can pick it apart tomorrow. So we'll be back tomorrow morning, 7:50, same time for Frankfurt, 2:20 tomorrow afternoon for New York. See how we get on with these this afternoon. I'll be in Telegram group. I'll have a look at that set file that you sent me. But yeah, I'll be back tomorrow. We'll see where everything's moved to and see what the outlook is. We'll probably have a bit more news coming off the back of this afternoon. So we might have a few more mentions coming out from various parties as to what their thoughts are on this, because obviously this is two members basically saying the opposite thing within 10 minutes. So quite often when this happens, you get one of the Fed coming out and going, no, what we actually meant was clarification. So we'll see what happens. But the minute, that could fly either way today. Outright, you think you've got it sorted? All right, okay. I won't get back to you in Telegram then. But if you are stuck, let me know. Right, I'll be back tomorrow. Have a good day. Hopefully, try. And yeah, we'll see you in the next session. Have a good one.